Good morning, good afternoon, or good evening. Obviously, like every weekend, I have absolutely no idea what time you're watching this. However, it is 4:39 a.m. on Monday morning for me over here, 4:39 in the afternoon over there on the East Coast for you guys. And we are here to look at the week ahead, which is the final week of not only March, but the final week of the first quarter of 2025. And there's not really too much that I can give you other than let's have a look at this thing. So before we go forward, I am going backwards and have for you here on the screen what I shared for you on Tuesday, February 18th, as I was having. Prior to this, if you remember, I shared you a wider view video of not necessarily the cycles, but more the time frames of how these movements have taken place from bottoms to tops, the periods and lengths in between them. And again, because we were searching for a top, tops are processes, bottoms are events. Reminded you here on Tuesday, February 18th, the famous Jim Cramer tweet. What the hell's happening? Where are the sellers? And that came on February 19th, 2020, which was the COVID top. And I've been discussing this and tracking it over time during this period, as here back in COVID, we topped on February 19th. Bring it over to your SPX and scroll up a little bit, and we topped on February 19th. March 10th, okay, March 10th, that was our big, huge sell down day. As we gapped down below that 57.70, below 50 to 57.05.37, gap below the 200-day moving average. That was the big sell-off day right there, that big March 10th. The bottom came in shortly after it, but that was your big sell-off day. I'll bring you back over to COVID. Your circuit breaker was on March 9th. Unfortunately, March 9th was a Sunday, so you saw all that selling that was taking place on the Sunday night, but we didn't see the results until the Monday morning when the market opened for us. That was your big circuit breaker. Well, today, Sunday, over there on the East Coast, it's already 24th for me, March 23rd was where COVID bottomed. And where did it bottom? Bottomed at 2191.86. And the results of that COVID drop was a minus 1,201 point move. And as I've been comparing this to COVID throughout the duration of this 4 or 5 week decline that we've been in, the range, these 100-point move days, 100 points consistently, and then we slowly started to get out of the 100-point range a few days after the bottom had already been placed at 2191.86. Well, we've done the same thing over here, where we had our 100-point ranges and they were consistent, and then all of a sudden, shortly after the bottom, even though, the bottom didn't come on the big circuit breaker day, we've slowly started getting out of these 100-point range days. And again, this being COVID, you had your big, humongous day there on Wednesday, 93 points to the upside, 17-point gap up, highs of the week. So what we've really done, more importantly, is we got a green week, but the green week came complete shit. Total shit. 31 points. You call that a doji, you cannot call it a doji. That's completely up to you. The week prior, 66 points. Again, you call that a doji, don't call it a doji. It's completely up to you. I'll go over those in a few minutes when I go over to the charts. And here over on the SPX spreads. They're going to close it red on Quad OPEX Friday, 56.70, 56.75 from the Thursday night. You had every opportunity in the world to close this trade early in the morning when you could walk away like I posted in the alert room, take your $2.50 and move on about your day. The 56.30, 56.35 trade of the week for the green weekly candle paid out full credit and was able to be entered into and exited multiple times during the course of the week. Where did we wind up? We wound up at 56.67.56. We produced absolutely nothing. QQQ. Green week. This one, I don't care who you are, you can call this a doji candle. They finished the week green, but up by 1 point. 1.23. Not a very bullish scenario going into the end of the month, the end of the quarter. And definitely on the IWM, producing a minus half a point last week, and this week a plus 1 point. Dojiville over here, after having 5 red weeks in a row, and this week going over there and saying, aha, green week. Nothing whatsoever, not only bullish, but nothing whatsoever has been accomplished. Nothing. So I bring you over here to the weekly count to look at this from a weekly point of view on a clean surface. Because, again, on the Dow Jones, better part of everybody, but still nothing looking great other than you definitely got your oversold warning levels over there on the Dow Jones last week. Dropped down there to 40,700. And this week, nothing. Flat burger. Good week, better than everybody else, but still nothing out there being accomplished because everybody wants things done quick, fast. Come over on your SPX, and again, your big warning oversold on your weekly candle. Nothing accomplished. Nothing. Come over onto your NDX, and same story. Your big oversold warning level. And then you got back-to-back. Do what you want with your candle callings, but I'm not a candlestick guy, but I simply look at this and go, doji, when I see how everybody else's big ranges are. And then I come over onto the final part of that being the IWM. The IWM is pretty damn clear. Things are not looking rosy despite the big, super oversold warning levels as well over on the IWM. So where are we? Well, I'll tell you where we're at. We are at the new moon this week. The new moon coming on March 29th. And while we're on this discussion about the new moon, okay, while we're on this, because I still think that there are a few people that would rather go to work than spend a little bit of time on this video game that we play, which could provide for your independence within a matter of a couple of weeks. But, you know, if your boss called and said, I need you to come in early, you'd be in early. But when it comes to you spending a little bit of time and trying to figure out the video game, you got other things to do. COVID. The top on COVID happened February 19th, 2020. The bottom on COVID happened on March 23, 2020. Looking at your full moons over there on 2020. Sorry, this is 2019. I am wrong. Oh my God, I am wrong. COVID was 2019, 2020, 2019. There we go. Here is your new moon. Where are we? New moon was on February 23, and the new moon was on March 24. So right inside your wheelhouse. And here we are coming into our new moon happening here on March 29th. All that it's indicating to you is that there should finally be a change of events. And as we've been all looking forward to, which helped with this decline to the downside, tariffs. And he's out there screaming and hollering, April 2. Well, like we've shared, and a lot of other people have shared as well, is April 2, my opinion, You're going to see a lot of countries drop the tariffs that they have because it's a reciprocal tariff. So by dropping the tariff, they don't get an additional tariff or one added to them that they never had. And all of a sudden, boom, you've got your catalyst because tops are processes and bottoms are events. So I'll bring you over here to the daily chart, and this is where we are. I prefer to do this before we move into my charts because this is where there is a little bit of a warning that needs to be issued for everybody to clearly understand. This is the SPX daily. We have gone nowhere for 2 weeks. Nowhere. We got a 200-point bounce, but we haven't gone anywhere. What that's allowed us to do is for the MACD to start curling back over and starting to get a bullish cross because we haven't gone anywhere. So the moving averages have caught up with one another. Got a little bit of the morning hiccups over here from the coffee. The SPX, again, over on the RSI, we're already at 50. So a pop, call it the 200-day moving average, and the SPX is going to start screaming to you, hey, guys, we're overbought. So you got to be careful about that as far as from a blind bullish point of view, despite considering any kind of an upside move that we could or could not be expecting. Over on the NDX, the exact same thing. Having gone nowhere for 2 weeks, which is not bullish, not bearish, the MACD has had an opportunity to catch up with itself, and it's starting to make a bullish cross. And your RSI is already at 50 over here on the daily. So a little bit of a warning for you as far as all that goes. But again, I want to come on to something here at the end of this video, which I think is important, because on Friday, I was throwing it out there because I don't look at you all as, just a blind account. I take the time to do one-on-one calls with whoever would like to because I want to know as much as I can about you so that when you ask me a question or when I see you post something, I know who you are. I know everything that you've been able to share with me so that I can help you avoid making an enormous mistake, or I can encourage you to be even more aggressive with whatever view it is that we have. And so I threw some stuff out there on Friday because I didn't want people blowing their accounts up, which is what Quad Alpex does. And I threw out here a little bit later in the morning, here. Anyone struggling today either isn't paying enough attention or is retarded. Because if it is tough love, if that's what it's going to take, I'll beat you to your needs. Because I don't want your kids, I don't want your spouse, I don't want your parents to be embarrassed about you. I honestly want you to be more successful, better win rate, bigger trading account than me, than Rick, than Keith, than John, than all of us combined.
I want everybody to raise their hand. Everybody raise their hand. Now I want y'all to raise it a little higher. Ask yourself this question. Why didn't you live 100% the first time?
But you gotta put forth the effort. Like I said, if your boss called and said, hey, I need you to come into work early, you'd bitch and complain, but you'd still go. But when it comes to doing a little bit of work and trying to figure out this game on your own, using Google searches rather than throwing a fucking question into the chat room, which you could find the answer to on a Google search, stop being a lazy piece of shit. So let's go on to the charts. Come on here onto the SPX, and I am looking at the 2 weeks. The last 2 weeks, like I said, we've done nothing. Yeah, sure, it looks and appears that we are making forward progress because we're holding above 5,600, but we've gone absolutely nowhere for 2 weeks. Nowhere whatsoever. So, again, moving into the final week of the quarter, the final week of the month, I see zero reason to be aggressively expecting to see the 200-day moving average this week. besides any kind of tariff catalyst. And at the same time, I see absolutely no reason whatsoever to be aggressive looking forward to the downside, despite the ridiculous weakness that we have traded through here over the past, call it 5, 6, 7 days, having the bottom come place over there on Thursday. Wider view, again, we're looking at this as we counted 9 waves down, very technically perfect that we could be looking at here as we have hit our bottom, and that's what we're looking for, and a 1-2 flat. 1-2 flat. So again, expecting to see that move up into the 5800s, expecting to see that 5700, 5770 gap get filled, expecting to see the 38.2 retracement at 5750, expecting to see the 200-day moving average as a minimum to start making progress to the 50-day moving average. All of it there, but we haven't done anything whatsoever in these past 2 weeks, and thus everybody is sitting back and waiting for that bang, bang, bang. Bottoms are events, and that you've got 2 this week. You've got the GDP and the PCE, which comes out on Thursday, and then you have your April 2 tariffs. So 2 big catalysts that are on the table, because again, as we went into this entire process, like I shared, very, very possible that we could be looking at this as this is nothing but an A wave to the downside, because, bring you back, how we started out the year. We started out the year 556 trading sessions without a minus 20% correction. 295 without a minus 10% correction. Well, we got that. Minus 10% correction, we got that. But we are now at another 54 onto that 556. And we are now at over 600 trading sessions since our last minus 20% correction. So we are far from out of the woods as of right now. We are way far out from being out of the woods as far as it comes to how we're looking at this bounce. So yes, this is 100% still on the table. Looking for a bounce, looking for a dip, an A wave, a B wave, which could have that already, and then one more bounce up to, again, roughly around the 50-day moving average, only because that's pretty standard. You see it over and over again, and then a move to the downside come April because tariffs are put into place, come April because earnings are complete shit, but that's what you are still highly probable of being able to see. But again, I still see a move back up to the 50-day moving average as a bare minimum to get everybody loaded onto the bull bus before we get the next move to the downside. Again, coming at this from the Trump clean, nothing to look at point of view, this trend line, we've just been banging along this trend line for the last 3 days. Not that I'm a trend line guy, but hey, it's right there. It's in front of everybody's face. The 38.2 retracement, 57.50, still expect it. 200-day moving average, which is moving up, still expect it. The 100 and the 50-day moving average have made their bearish cross. The orange section being Donald Trump's stock market, so a move back up to 58.64.89 would mean that the Donald Trump stock market era is green. But as you're watching here in red, your 50-day moving average continued to move to the downside, and it will continue to move to the downside to factor in all of this work that took place over the last month. The 200-day moving average is going to continue to be moving up to the upside. So roughly sometime in May, we're very likely to see that death cross, the 50-day moving below the 200-day moving average, and old people freak out. When that starts to happen. So, QQQ, nothing burger. Again, same thing, nothing burger. The only thing is your bottom came in earlier, came in here back on March 10th, but we have done nothing. We need to get that up above that 483.40, need to get up above that 487, start getting into this gap here at 492, and then we can start seeing that, okay, yeah, we actually have something, because everything is inside the QQQ. QQQ is the engine that drives the SPX. From a wider view, let's move out here. Again, from a wider view, it looks clean. It looks perfectly clean. We topped back here, back in middle of December. Got our A wave to the downside, our B wave a little bit higher over here into February, and bang, 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 minus 13.65%. C equals the 161.8 extension. Everything looks crystal clear. Everything looks fine. But we got to see some movement to the upside first before we can start saying, okay, yes, the bottom is definitely in. Look here from again, another count coming off of the drop from February 19th. I see here 13 waves. Thus, very possible that it is done because you have your 13. If it's not 13, then we're looking at 15, 17 to the downside. But again, I don't see this as anything that is screaming negative other than a much more aggressive move to the downside with the 50-day moving average. A lot more aggressive. And the 200-day moving average slowly moving to the upside. So over here, we could very, very well likely be looking at the death cross potential on the QQQ sometime in the middle to the latter part of April, which is right around when earnings are about to begin. Over onto the Dow Jones. Dow Jones, nothing really to scream and holler about saying, anything is horrible or great. Nothing. It's been a nice day. Let me see here. I have this time frame on wrong. Okay, I think we're better there. Oh, maybe I did have it on right. Again, nothing other than gaps to be filled to the upside. Nice clean bottom. No, not on that. We zoom out here, and again, seeing here from the big bottom back here in August, 61.8 retracement down to it. Looks pretty technical as far as what we'd be expecting for a wave 4. So again, projections are still for one further wave to the upside, and that further wave to the upside should at least bring us back into the 430s, which there we can start making some visualizations and adjustments to see whether we are going to get a move up into the 470s. And then your IWM. And yeah, your red-headed stepchild is over here riding the short bus to school, and it ain't looking good. It ain't looking good for IWM in a lot of different perspectives, but the IWM is going to need that tariff drop. They're going to need it badly to get that 208, to get back to that 212, 213 area, because if not, this thing is already in a big, humongous pile of shit. And I'll bring you out on here. We don't need to be looking at that. We can be looking at something cleaner. And yeah, when I say a big, humongous pile of shit, what I'm talking about here is the death cross, which has already happened over here on the IWM. The 50-day crossing below the 200-day moving average, you are sitting on life support, holding above this 196. And if this is a 1, 2, 3, looking at a potential 4, and then the big, fat, huge wave 5, 187 is going to shine like one of those things you stick up your butt, which fucking reflects when you go to the nightclub and you're not wearing underwear. 187 is going to glow in the dark like that down there. So a lot is still on the table as far as this all goes. But again, coming from it from a big, broad, wide point of view, the VIX, gorgeous, absolutely gorgeous, selling off all down from that 2884 visit. But we got to get below 1912. We got to get below 1811 to start believing that, yes, the bottom is actually in. The markets can now start making their move into summer, into September, before we get the big next leg down. The next big leg down. Fuck, man, it's 5 o'clock in the morning. So I leave you with two things. The SPX from a monthly point of view. And as you can clearly see here, we are getting a red month. There's no question. From a technical point of view, this is getting very aggressive to the, not yet oversold, but it is starting to warn you that you don't really have too much left in the tank to get this down too much further. Where can we go further? Well, like we talked about before, we're always talking about that 48.50 area. But from a monthly candle count point of view, we've got two. Now, we had three back here in July. I'll zoom in here. We had three last year when Israel went to invade Gaza at the end of October. And like I said to everybody, we got 3 red months in a row. We're not getting a 4th red month. Let's go. Time to be bullish. Bang. Back during your 2022 drop, you never had really back-to-backs other than here over in August and September, and we bottomed in October. And then October, bang, big, huge green month. We had 2 back here, middle part of July 2020, and you had your 3 because January was a red month, doji candle back in 2020, and then your COVID, your February and your March. So you really are sitting on something here which has a potential for a pretty simple sit back, relax, don't push any buttons April trade for the month of April, which I've already talked to a couple of you about. And then you come out here and you look at it from a quarterly point of view. 3 quarters, 2022, quarter, 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 quarter. This is going back to 2015 where we didn't do anything for 2015. We barely moved. So we're putting in a red quarter over here. So again, I'm pointing it out to you from a, wider point of view. We could very easily be setting ourselves up for that final leg to the upside, which will not, I promise you, it will not be as aggressive as many of you want to believe that it is going to be. Because like I show you here, go on a daily, and I will pull this one out. This is, no, I don't want that. I want to be at 2018. 218, and we'll move it a day. Come on, you're wasting my time here, Tim. Right, wrong. Yeah, here we go. The January 2018. Boom, the Trump top. Bang, 11% in a couple of days. The bounce back up here into the middle part of March, which is what I was looking for. Boom, and then the drop down and bottomed on April 2. April 2, April 2, April 2. History doesn't repeat itself, but it sometimes rhymes. And this move from that February 9th, April 2, call it double bottom, over here through the old all-time highs to the new all-time high over here in September. This happened in August. Took from April through August to get back up to the old all-time high. So when we're talking about that aggressive, bullish view for one more leg higher, and again, I will bring you on to, it's a video game. Look at this from a numbers point of view. The SPX, it dropped 642 points. COVID, it dropped 1,201 points. Almost identical to the times, almost half. So, yeah, from a projection point of view, I do believe that we are very close to a bottom, more so than another leg to the downside. It's been a fun month. It's been a good month. But I really want everybody to enjoy themselves a lot more than I think that they are. So with that, I want to send you some good vibes for Sunday, some happy thoughts, and you all know the lyrics. Every one of you knows the lyrics to this. So don't be afraid to sing along.
She's got smile that it seems to me remind me childhood memories where everything was as fresh as the bright blue sky. She's got smile that it seems to me remind me childhood memory where everything was as fresh as the bright blue sky. See her face, she takes me back to that special place. And if I stay too long, I probably break down and cry.